Daniel Hussey Jr., the third King of England. How are you?
Good, Dale. How about yourself this morning? Everybody hear me?
You're loud and clear, Daniel. What's on the docket?
Yeah, so, let's see.
You could share if you want.
Fine. Yeah, I'm trying to get that to work here now. I'm not seeing a share
It's at
my screen option.
okay. Share screens at the bottom of the Zoom. What's that?
Oh,
That's your
share
camera.
screen. There it is. Yeah, I got it.
Yeah, that was your camera thing. Yeah. Okay. Beautiful.
All right, can we see a big old chart of the dollar index up there?
Yeah, we got
There
it.
we go. Yeah,
Nice looking.
I figured markets, we can talk about whatever is on the room's mind, but gold, bonds, the S&P, the dollar, um, these are markets that I feel like have hit the headlines recently, gold in particular, but I was, fondling over the US dollar this morning, I'm mesmerizing at its strength on the daily and weekly chart, right? When we go back to like 2010, it's amazing how far we've come in the last 2 decades, but
Yeah.
the dollar still remains well off of its, peak highs there from a year and a half ago, and consolidating in this 100 to 106 range, finding our way right back to 103 doesn't do much in the way of give us a direction to trend or, much to sink our teeth into, right? And I wonder if, markets like gold and the bonds right now aren't foreshadowing, bigger moves in the dollar coming. Um, but the sideways price action we've seen, and consolidation of the dollar is not so different, I guess when you go back and realize, hey, we spend these big periods and these big 10-point ranges over the span of about, 5 to 10 years. And the question I, ask myself, are we setting up into one of those, currently? And is this range bound price action for the dollar between 115 and 100? Is that something that we're going to have to get used to, going forward? And if that's the case, well, there's probably some room for some dollar strength on the chart, but I think it's hard also, hard to imagine that if we slip below 100, things wouldn't get more interesting for the dollar. And could there be a bigger turn if that signal happens? See, did the
What would be the signal? Under 100?
yeah, I think under 100 at this point is certainly a close below a daily, weekly, close below 100 at this point would be a pretty big indication that there's been a shift, at least on that daily and weekly chart, right? It's something that hasn't happened in the last, several years since, going back to March of 2022, or the start of 2022, really. So, kind of taking that same idea and focus now into the bond market, um, we've seen generally, right, a dollar that's held on to the gains of the last several years, which is in stark comparison to the bond market, which has, really lost a lot of those, a lot of its strength. And you'd expect that, right? There's an inverted correlation between futures bond prices and currency and the strength of the dollar. But what we're seeing in at least in the bonds is a continuation of this trend lower, potentially a little bit of a reversal, but generally speaking, the larger trend line, the larger channel, a lot of the bigger resistance levels, like up around 127 to 130, remain unbroken in the bonds over the last year now. And coming back up to test these levels, is that an indication that a reversal is happening, or are we just, finding the resistance on the bond chart, the support on the dollar before ultimately continuing the trend we've seen since the peak, COVID highs in these two markets? And that's just a little bit of a segue into, I think, talking about gold here today, because this is the chart that has really changed the most, in my opinion, in the last year compared to every other chart we've ever, talked about, you and I at least, because hey, gold was in this range and capped by 2,100 bucks, um, for its entire existence. And now we're actually breaking out into new all-time highs. What does this mean for global inflationary pressures? Is this a sign of our times? Is this the world and the global economy finding a new normal? Personally, I think it is, but that's a bigger question for another day. Um, See, we got a question here. I mean, I'll just start shooting into these. You hear facts about how stocks are in a bubble and also how they're cheap relative to past times. Curious of my thoughts on that. Yeah. Um, I think the idea that a bubble in the economy is relative, right? We're always inflating these bubbles and they're always deflating. So don't get caught up in the crashing waves on the beach when you're talking about rising tides. Inflation is a rising tide. It's not the waves crashing on a beach. Okay. So I think there's a lot of misconception that, okay, we had this period of inflation, right? And now all of a sudden we're in this period of what is also referred to as disinflation or deflation right now, right? The bubble is contracting, or all of that money that was pumped into markets that caused them to inflate, prices to go up, it's starting to find its way out. And that's a natural occurrence of when yields and bond markets go up, right? At least that's what we're taught in macroeconomics. Um, Prices of asset classes like gold didn't respond in the last 10 years to those types of moves. We hit a proverbial ceiling in gold markets. And
So where do you
and
buy it,
that,
Daniel?
I'm sorry.
What do you do that's actionable in gold now?
Yeah, so the actual and gold, we've broken out, right? I think that this is you're maybe chasing gold right here and now, right? Up into the levels we're at. However, actual levels on gold test back towards the 2100 area. It seems to
Yeah,
be the old resistance that in the channel or the range that the market was in here, coming back to test this old range high now
yeah,
as support as we
yeah,
start to break out higher. It did a little bit of that. Maybe you could argue 2000 to 2100 is that area. Again, we're looking at a daily chart of gold here. So the swings are going to be 50 to $100 within some of these ranges we're talking about because we're talking about a swing from 1600 bucks up to 2200 bucks in gold, right? But the next actionable level I see, we're channeling higher in this trend. You've got an up channel. You've got two steps forward, one step back. In other words, the first 50 back from 1600 up to 2085, 50 back into 1852. That traded up towards technical projection targets around 2200. Okay. Next in the series here, um, technically already kind of traded something. But moral of the story is we seem to be making these two steps forward, one step back kind of pattern in gold. I think we just made proverbially two steps forward again. Now one step back would take us into 50% areas around 2095 or 2014. One of those two actionable levels in the near term. You can see in the a smaller time frame here, we're starting to maybe get another channel higher. So you're going to see channel support probably come in around that 2100 area. And you're also going to see that even larger channel support that we could be creating in gold coming around 2000. And that's assuming, right, we kind of keep going up to sideways and not just straight down from here because those channels are, of course, support levels are below where we are. I'm assuming we get there in, a week or two, time, and they will have risen a little bit, right? But those fib levels are there at 2100 and 2010. Those levels align as well with that much larger breakout area for gold that I think we've consolidated below. We're now above. Testing the 2000 to 2100 as support is a market that's proverbially discovering price higher. And staying above those levels, in my opinion, will continue gold towards that much larger swing target of 2300 bucks with an extension towards $2600 if it really gets crazy. Because these tops in gold can be kind of blow off and run away. And when they really extend, if it wants to, in my opinion, we could get all the way up to almost 2700 bucks in this run.
okay. So the ags continue to be under pressure. Last time we talked that there
Yeah.
might be some lows. What's the current condition of the
So the
crops?
last time we talked, I think we had quickly kind of looked at, and we can take a look at that as well. A mini barometer for broader inflation. Ag markets were an early driver. Um, I have in front of you right now May corn. So that's our current front month corn contract. It's the one that matters. It's that blue line here. And this is aligned with the last like few very bearish years for corn. 2019, 2018, and 2014 were very bearish years. Market was going down. So what we've done is we've aligned those contracts here so that you can see from now into the end of the or end of the contract if there's any kind of seasonal bounce, even in the worst of the worst years, because corn and agricultural products, everyone, are very seasonal. They come out of the ground only once a year in the United States, right? We harvest corn once a year. So we know how much production we do on a national level every year at the same time. Then the rest of the year, it's just demand, right? We're just eating away at everything we produce. So you can create a very somewhat accurate model and get a pretty good pricing model. The point is that there's seasonality here. And what we see here is back in the years like 2014. 2014 is, these are terrible colors here, folks. Let me try to switch them really quick.
So
I think if I
Daniel,
just take,
I've talked to other grain people, and one of the biggest factors is China did very little buying of U.S. grain. They went to their BRIC partners, Brazil, to do all their buying.
which they usually
So
do. That's the only other competitor in the grain space. There's two major producers of grain around the world. It's us and Brazil. Yes, Europe and Ukraine produce a solid amount of soybeans and corn, but nothing in comparison to our production. While we have seen China take a step back from our export markets, they haven't exited completely. They're still buying, just not to the tune that they normally do. And they're a little behind. That doesn't mean they can't catch up, and low prices are usually the answer for any lack of export demand. What we have seen, however, is larger exports from other places in the world. In other words, China is buying from places like the Black Sea in bigger quantities than they ever did. In fact, they just bought 10 million metric tons of corn out of the Ukraine. That's a rather large purchase at a time of the year that's normally not happening. And that just means that that's corn that isn't there for the rest of Europe and Africa to buy, and those countries are going to probably have to come to the Brazil or the U.S. to meet their demand. So it doesn't matter where
interesting.
China's buying from. If they're buying corn, eventually it's going to have to come from the U.S. balance sheets. We've also seen Mexico buying about 3 million metric tons more than they have at this point in the year. There's a lot of questions asking if there aren't other countries doing China's bidding right now in our agriculture markets, and what we will,
Interesting.
I think, eventually refer to as the Great Grain Heist of 2024.
Okay. And it's interesting. They're doing a lot of buying from Ukraine with
Mm-hmm.
their alliance with Russia. It would almost seem like China would have a good reason to put leverage on Putin to end the war before he destroys that grain belt.
Yeah, and I think an alliance between China and Russia is a very loose term. I think we're talking more frenemy relationship
Yeah,
because
the
China will
enemy of
do
my
what's
enemy is my friend.
right. China will do what's in the best interest of China. Period. End of story. China has no real allies, in my humble opinion. They will always do what is in the best interest of China, as every country genuinely should do. But you can't fault them for that. But routinely, you see China only making decisions for the best interest of their national interest, and that's what China is going to do. To finish and wrap here on the corn, you can see the seasonally we're starting to bounce at a time in 2014 we did as well. 2014 is very similar to this year because in 2013 we came off of contract highs, very high prices in grain markets. We're talking like 10-year highs, just like we just did. In 14 we fell, we collapsed down into 15. We're collapsing just like we did then. Even in that year, we got a solid bounce in the grains between now and May, which I'm anticipating happening. You can see on the overlay of these seasonals right now. That bounce might be happening right now. And if that's the case, this short covering rally in grains, because by the way, everybody, if you're into watching, if you paid attention to the last few years and heard about short covering rallies and when big hedge funds get short, guess what? They're record short soybeans and corn right now, which means the only way those funds get out is by covering those shorts out of the market. And you're starting to see that in corn, and the price of corn rally because of it as those shorts start to come out of the market as we head higher. So you want to,
Interesting. Yeah.
talk about a place
So
where there's another
the seasonal
short
pattern
squeeze. This
seems
might
to
be one.
imply that there could be problems with planting.
That is true. That is exactly right. There's problems with, it's a twofold thing here, Dale. There could be weather issues with planting in the US and acreage, right? If prices are really bad, farmers won't plant and they'll take insurance or other products to get paid. So If the acreage number comes down and they decide not to plant because these prices are bad, that'll reduce our supply at the end of the year. If we get a late plant, that means the plant will be, not have as long of a life cycle, won't be able to grow as much. We'll have a lower production. And the kicker in the hole right now is weather in South America. Brazil is behind on their 30-day window of rain going into their second crop. Brazil is such an agricultural powerhouse, people. They produce 2 seasons of grain in their summer. They plant soybeans first and then plant corn after the soybeans and harvest it. So imagine growing 2 crops in the same field over the course of a year. That second crop of corn, though, it has a very short window of weather opportunity to be made, and they're in that and behind on rain. So if they don't make a crop in Brazil, as much as you like to say China can turn to them and buy corn, there's not going to be corn to buy, and they'll have to come back to our markets. And there's a very strong opinion here that we have turned the tide because they backed themselves into a corner. If Brazilian production isn't there, funds are way too short US markets and are starting to cover. And now they're going to be competing with other buyers like export buyers that might be coming into our markets and saying, hey, US grain prices are actually really cheap right now. We should take advantage of this.
So are the Brazilians at risk of ruining their soil by not letting it lie and fallow for a period of time that they're overproducing in that soil?
Huge risk, huge risk. Brazilian topsoil only goes about foot deep, right? We're talking about old rainforest. They don't have the 12 to 20 feet of soil we have in Illinois that, you know, we can literally get almost zero rain. So long as we had rain the year before, we could get almost no rain in Illinois and still grow corn because there's enough moisture in that soil, the corn can get it out through a whole drought year. The second year following that, there may not be much soil moisture in the soil left, but that's the power of U.S. agriculture. They don't have that type of soil. They have clay loams that are sandy. The water runs away. And if they don't get almost constant rainfall with every week, crop production in South America takes a hit. They happen to get rainfall almost every week, though. So their soil quality is definitely not there, and their input costs are very high. So that keeps a strong relationship between Brazil and Russia because the number one input to all of these agricultural products in the form of different various fertilizers, they all come out of Russia in terms of where they're produced. So there's a natural right? There's a natural trade balance between countries in the BRIC nations because they're producing and using a lot of the same things. Can't fault them for that, but at the same time, Brazil is very, very reliant on Russia and China for their entire agriculture sector. Their inputs from Russia and selling everything they make to China.
Wow, that was a we see. You know what's cool about these interviews? You never know where we're going to go. You know what I
Yeah.
mean? I mean,
And
so
and and
go
to
ahead.
wrap up our grains here, for those that aren't aware, soybeans are a lot like oil, the crude oil. In fact, to bring everybody up to speed of what the next big thing in agriculture will be, it's sustainable aviation fuel. This is a $30 trillion industry. I mean, we're talking probably the biggest thing to happen in agricultural since ethanol and corn, but probably since high fructose corn syrup was invented for the corn market. The point is that there's demand here from the entire aviation sector for fuel that can be made entirely from corn and soybeans. And it's completely green because we're able to put the carbon back into the ground via different sinking mechanisms. That's another story. But the cool thing is the demand that could come from this. And everybody should start thinking about a soybean just like a barrel of crude oil because one soybean is cracked or crushed into bean oil and bean meal. And bean oil and bean meal both have charts that you can trade and follow alongside the oil seed complex, just like you can gasoline and heating oil or the diesel when you talk about the crack spread in the crude. So if you haven't looked at the crack spread in the crude yet, take a look. It's a cool,
Crush
dichotomy
spread.
of futures markets, right? Spread.
Yeah,
Well, there's the crush spread in the grains, and there's
yeah.
the ethanol crush and the soybean crush, where both corn and beans are crushed into their meal which is cornmeal or soy meal, and their oils, corn oil, which goes on to become ethanol and other products, or soy oil, which goes on to become biofuel and various other cooking products. And there's spreads there to think about. And so watching all these markets move is in tandem, seeing soy oil turn at the same time, soy meal find a low at the same time. There's something bigger going on in the whole soybean complex, right? It's not just one market maybe finding a bottom, starting to bounce and thing. So
Yeah, very informative. I didn't know that about jet fuel.
it, yeah, and Lucas, bring it up. He's Brazilian. Awesome. That's Lucas. I'd love to chat with you personally more too. And Lucas is bringing up that there's huge logistical concerns and storage issues. Two issues there with Brazil. You're not wrong, but there's also been immense investment in that infrastructure, ports to help move it, right? Trains to help move it around. But he's right. Brazil is still a developing infrastructure nation when it comes to agriculture. So it's hard to get those products from the interior to China, a lot harder than it is in the US. But that doesn't stop, right? Where there's a will, there's a way. The second thing working against Brazil is inflation. Farmers in Brazil are much more inclined to store their grain and keep it stored if they can. Storage is a huge issue because silos are expensive to build. You can't leave grain out in the open air. But if you store it correctly, you can keep it for a long time. And it's worth a lot of money relative to your currency, which is currently being devalued. The US dollar,
Yeah.
Brazilian real, we're seeing inflation everywhere. So a good hedge against inflation for the farm is to keep that grain in the silo where it's worth more to you in the bin.
So instead of stacking gold, they stack grain, and you can't eat
Correct.
gold.
And we like to joke in agriculture that soybeans are the real international currency. There's few things that are truly, every major society buys in mass and needs every year. You can't survive without this stuff, right? That's the
Yeah,
difference between it and gold. The
yeah.
problem is, it's of course gold. Gold will
It's
survive a
called
fire.
yeah, it's
Grains won't.
protein gold, right?
Exactly.
So, yeah, great discussion on the grains. I'm glad we went there, Daniel.
And
So,
let's give you guys
everyone,
some
you can
actionable
see,
items here on the greens right before we go, if you don't mind, Dale.
go ahead.
The big trend and the big thing that changed this year in terms of just 2024, the calendar year, for
Yeah,
both corn and beans, we have been
right.
below this 18-day moving average, this red line, the entire year for
Yeah.
2023 until last week. We finally flipped the script in terms of the technicals. And that's why I'm getting behind the idea that, hey, we're seeing volume buy up in this, volume come in here, volume buyers come in, right? Those are the funds, in my opinion. Big volume is pushing this market up. And you can see those little volume bursts right here through technical levels. Those to me are signals the funds are covering through the technicals that suggest trends are reversing. And so now you're in that short covering rally. It might be a bear market rally. We advocating our producers to use this rally to sell your grain this next year. Close you get to $5 for corn. I think that's a good area to be a seller, up towards 13 for soybeans. But in the meantime, the short-term trend is higher. Look for channel support in the 50 backs here for soybeans, May beans. We're buyers down into the 1170, 1161 area. We want, not looking for the market to go below this swing low, and for a pushback to the 100 and 200-day moving average is around $13. Okay. May corn very similarly pull back towards the 18-day moving average. You buy that on as a test of old resistance, now a support for swings up towards that 200-day now that we've broken above on these daily swings, and we're looking
You
for
know
that
what changed
short-term seasonal
four
high.
weeks ago?
What? You tell me.
The dollar and gold. So,
You're right.
it's
Gold
my
broke out then
contention that
too.
a weaker dollar is always going to be supportive of grains. So,
And you're right. And we may not have seen it in the Dixie, right? Because the Dixie in the bigger time frames in that bigger range. But boy, gold breaking out and Bitcoin going to highs. I mean, that's the dollar weakening, right? In a real sense, right? Against the basket of goods, not against other currencies, right? You're right. And I think, and it's funny, I wasn't even cluing into that because I've been so hyper focused on this reversal in the grains. There might be a bigger inflationary turn, right? We went into a period of inflation, things went really hot and wild, then things cooled off, prices came down. We haven't really gone down to where we were a few years back in prices, right? Everything's still a little higher. Now I think inflation is starting to creep back up. And if we get another round of it this rest of this year, this could get really interesting. So
Great presentation, bro.
Thank you. Thank you. Are there any
Show
other
people
questions? We got a couple minutes here.
show people where they could find you.
Yeah, sure. You can find me over here at Zaner.com. Technically, Zaner Ag Hedge. Well, here we are. You can find us over here. Sure. We are a precious metals desk too, so we cover the whole futures markets. But I'm a member of our Ag Hedge team. We specialize in managing risk management for agricultural producers. We do work with speculators and anyone who's interested in getting into futures, but typically, right, people who are trading futures from a commercial and a business standpoint have actual physical commodity exposure, and we look to help folks with that. That's Ted Seifert, their president there. He's out on the crop tour, so we're boots on the ground in these things, trying to keep up to date with everything that is that matters in the ag world. And our metals team is doing that now. I think they're going to be in Denver this weekend at a show. But anyway, 312-277-0110 to get in touch with me. Thanks for having me, Dale.
Yeah, so if you're a grainer, check Daniel out at Zaner so that your trading will be saner.
I like that. I'll let Matt know.
Okay, I'll let you. You could have it. That's my contribution to Zaner today. All right, Daniel. Have a great 2024. I'll talk to you in the summer, and while the grains are advancing, and then contend with will we get rain with La Nina.
Yes.
El Nino was a Grande El Nino was a flop, but we'll see what happens this year. I think you're onto something.
And just leave us with a little note there. You're absolutely right. While there's bigger, broader macroeconomic things happening, there's also those almanac things, right? The El Nino, La Nina effects here that weigh in on ag markets. And absolutely right, Dale. This next year is going to be very interesting on all fronts.
$20 beans in 2024.
I got a lot of clients that would be very happy.
Okay.
If that happened.
All right. Well, remember beans in the teens? That's passe. So now we need something to rhyme with 20s. So,
and that is, and hey, over the next month, that's another reason psychologically why I think we get back up there, because the farm wants to test whether or not we should be below those, price levels. This price discovery. Go back to test where we came.
Daniel Hussey Jr., everybody. Follow him on X at the same name and check him out. I think grains. I know I sound like the boy who cried wolf, but maybe the wolf is really here for the grain market now. All right, Daniel. Thank you, buddy.
Thank you. Take care, everyone.
All right. That's a wrap, everyone. You could join the team on the morning edge in 15 minutes. Good hunting. And don't just count your ears of corn, your pods of beans, and your wheat, and count your blessings. Adios.
Hey traders, this is Blake Morrow with Forex Analytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.